Okay, yes. So we are live. Hello, everyone. So we are live here on our webinar platform, and also we are live on our YouTube channel. So thank you all for joining and welcome. Just one message to our viewers on YouTube. So if you would like to ask questions to our speakers, so please register by the link you see in the stream description, because we don't have comments active on the YouTube. Okay, so today we speak about receivable finance, economic, regulatory, and technological impact in 2022. Welcome to our webinar. My name is Olena Gryniuk. I will be your host today, and my guests today are Betül Kurtulus, Regional Director for the Central Eastern Europe, Southeastern Europe, and Middle East at FCI, and Magdalena Ciechomska-Barczak, Vice President of the Management Board at ING Commercial Finance Poland, and the winner of our SME Banking Awards for the Best Digital Factoring Solution in the CE region 2021. So hello, Betül and Magdalena, and welcome.
Hello, good afternoon.
Hello to everyone.
Okay, so before we go to the topic directly, let me mention very shortly some organizational information. So we plan our webinar for 50 minutes. We start from the presentations, and right after we will have time for your questions. So please type your questions into the chat even during the presentation, and in the end of the webinar we will have Q&A session and we will answer all of them. And we are recording this webinar, so right after we finish, you will receive the link to the video and the presentations. So let's go to the topic. Factoring volumes are growing constantly in all the regions, mostly, and this year is not an exception. And if we talk about SME segment, factoring became, I would say, the main product for financing their financial gaps during previous 2 years, especially when banks restricted their credit policies when pandemic started, and counterparties delayed their payments, which was a problem and was crucial for SME customers. So let's talk about all these factors that are impacting factoring market this year. And Betül, I'm passing at once a word to you to give us an overview of the global and European factoring market. You're welcome.
Thank you, Olena, for introducing myself also. My name is Betül Kurtulus. It is my pleasure to be with you today and to share the developments of our industry. Here today, I will start with the global statistics. I am pleased to present the 2021 figures after a very challenging year of 2020. And 2021 is a turmoil year for the whole industry. We enter a new year with the continuation of the pandemic, residual of the trade war, and the geopolitical turbulences, war on the Ukraine and Russia creates a great uncertainty about the future. Just a couple of weeks ago, you may know that we had our annual meeting in Washington, D.C. But unfortunately, with the effect of the pandemic, many of our members, especially from Asia, was not presented during the annual meeting. But we made our first physical meeting after the pandemic, after 2 years, again with a huge participation, with the support of the US members and the other members who could meet with the problems of traveling, the budgeting, visa problems, and COVID-19, etc. So who made who overcome all these problems? They join us during the annual meeting. And certainly the difficult times continue. We did not overcome all the problems, but when we look at the figures, we see that the results are very satisfactory, and our members are doing better than the past. FCI released the figures of the 2021 during the annual meeting, so I will share the results with you today. On this slide, you are seeing the global factoring volume from the last 20 years. You see 20 years compound annual growth rate of our industry is 8.2%, which is phenomenal. It is when you compare the other types of the receivable financing, the increase is phenomenal. You also, on this slide, you see the distribution of the turnover, domestic and international. On this slide, you see the 2021 global factoring statistics and market share by region. On the bottom, you see that the growth, the overall growth rate was 13.5%, reaching the 3 trillion euro for the very, very first time. Overall, it is a phenomenal increase for our industry. In 2020, we reported a decline of minus 6% for last year, but in 2021, the increase is double digits. It was the first time for the last 2 decades. And we are approaching the half of the 2021. We didn't announce the figures yet, but when we look at the figures, we see that the rising sun on the even with the effect of the Ukraine and Russia war, the figures are very, very satisfactory. On the detail, you see here the regional diversification. Our biggest region is Europe, with the 69% market share. Europe is our, as you can see from the figures, it is the biggest market and the oldest market, and the growth rate is 14.8% on the Euro. Second biggest market is Asia. You know, the biggest market in Asia, the biggest market is China, and they are still under the effect of the pandemic. But the growth rate is 7.7%, which is quite satisfactory also. When we go to Americas, in total, North and South America market share is 7%. On the North America, even the amount of the turnover is quite small, but the increase is 45%, which is very, very good. In total, the increase is like 46%. And when we go to Africa, the market share of Africa is only 3%, but the increase is 28% for the last year. Last year, in the beginning of last year, FCI hired a regional director in Africa, responsible for Africa, and he's working with the Afro-Exim Bank together, and our investment is huge in Africa region. So our expectation for this region is very, very big. And coming to the Middle East, unfortunately, the Middle East market lost its momentum for last year. But we have very strong members in Middle East, and some new members are coming from the different countries. And there is a huge development on the infrastructure or the regulatory infrastructure in the Middle East market. So I think that the future is very bright for the Middle East, and economically, because of the increasing energy prices, the investment on the SME financing is huge in this market. So my expectation from Middle East for the coming years is also very positive. So at the end, the increase is very satisfactory, 2 digits, 13.5%. I already mentioned the diversification of the turnover, but on the map it is more visible. As I mentioned, 68% is coming from Europe market. In total, from the US, 3 for the South, 3 for the North is 6%. And the second biggest market is Asia, 24%. 1% coming from Asia, and less than 0.3% is coming from Middle East market. So here is the Euro factoring statistic. As I mentioned, Europe is a very developed market, and the increase, the growth rate year over year from the last year is 14.8%. It's very satisfactory. On the country basis, France 12%, Germany 12%, United Kingdom 20%. After Brexit, there's a huge increase in the factoring market, and Italy 10%. Spain 9%, and the other countries of the Europe, they have very satisfactory growth rate, 18%. And in total, we see that I like to compare I like to look at the figure of the GDP penetration of the countries. And when we look at the developed market of Europe, the GDP penetration of factoring turnover is between 10 to 15%, which is very, very satisfactory. We don't see this penetration in the emerging countries of the especially in the Central Eastern Europe, Southeastern Europe. It is like 1 to 3%. So it is on the Europe. When you look at the factoring statistic in Europe, it is the market is growing very, very satisfactorily. And here is the comparison to other forms of trade finance. I think this is very important slide. On the bottom, you see the increase of the total world export. It is 2.3%. And the other important things, when you look at the letter of credit, it is decreasing. The demand on the letter of credit is decreasing, especially in the pandemic because of the documentation. Even there is a huge investment for the digitalization of this documentation, still the need and also the demand for the letter of credit is decreasing. So cross-border factoring industry exceeding the letter of credit sector. The only product that is growing faster is the short-term credit insurance, and the increase is 6.5%. And credit insurance sector has a very, very supportive role for our industry. These two industries are not competing with each other, but completing each other. Because usually what I see from the market, they are not in the financing side. They don't want to be in the financing side also. So these two sectors are working very well together. This is the statistic and membership of the Central Eastern Europe, Southeastern European market. And when we look at this market, these two markets represent 30% in terms of membership. 30% of FCI in terms of membership. In Central Eastern Europe, we have 57 members. In Southeastern Europe, we have 52 members. And the growth on the Central Eastern Europe, here it is very satisfactory after the COVID period with 35% increase over the last year. The biggest players are Poland and Russia. We will listen the details of the Polish market from Magdalena today. They both have a very satisfactory growth rate. Poland 25% and Russia 62%, mostly coming from the domestic market. And I also want to mention some of very satisfactory growth rate on the region. Czech Republic 32%, Greece 20%, and Hungary 21%. Coming to the Central Eastern Europe, in Central Eastern Europe, Turkey is the far biggest market in the region. Despite the shrinkage in its turnover for the 5 consecutive years, it is still the biggest market in the region. But I want to mention the Bulgaria and Romania, very developed market in the factoring, and they are following Turkey with a very, very satisfactory growth rates. This is the outcome of the FCI statistic from its members. We can certainly see from the FCI statistic that our members and the factoring community and the clients are getting more and more conservative. And our observation is the rise on the non-recourse factoring. You see here the biggest share is represents the non-recourse factoring with credit protection. If we compare the previous year's data for this one, the share percentage of the non-recourse factoring was 44% in 2019 and 55% in 2020. So there is now it is 53%. So it is very slightly decrease on the non-recourse business, but the half of the market working on the non-recourse. And following the non-recourse, we have invoice discounting, reverse factoring, and recourse factoring. So of course, for invoice discounting, we have huge markets totally working on the invoice discounting. And for the reverse factoring, FCI members reports 98% increase in their reverse factoring volume for the last year. which is very, very satisfactory. And here is the factoring turnover distribution between the domestic and the international business. On the country basis and the company basis, this distribution is almost the same, 81% from domestic and 19% from international. I must say, from my experience of the developed and the emerging market, the presence of the domestic market and domestic players support for the regulation, law, infrastructure of the digital solutions supported by the governments and the legal authorities is very, very important. So this supports creates the ecosystem for building the international business. So without the support of the domestic factoring and domestic factoring operations, we cannot build the international business in the countries. This is very, very important. So here is the factoring products by category. So it is on the left-hand side, you see the total number of active sellers. The data shows that our members support the SMEs with almost 70% of the total amount. This figure was last year, it was 66%. So our members increased their share in the SME financing. Of course, the SMEs are very important for our economies. They are the backbone of the economies. And the statistics shows on the country level that almost 70% of private sector employment are coming from SMEs. So it is very, very important to provide financing for the SME sector. And on the middle, you see the average of the industries type by sellers in members' portfolio. So the biggest share is coming from, of course, manufacturing. But factoring is very, as you know, very flexible product. So it is adaptable for all the sectors, as you can see. The other sectors here, transportation, services, communication, distribution, construction, and others. And when we look at the manufacturing by type, it is even all sectors represented. The biggest share is coming from textile, but the other sectors are also not small: food, electronics, machinery, wood, and the others. So here is the FCI members' export volume from Edifactoring. Edifactoring is a communication platform for the two-factor system for FCI members. The two-factor system total volume represents the almost 12% of the total factoring volume. It's not big, but it's not small. And also it is very important for some of the countries, because some of the countries' turnover is coming from totally from the two-factor system. So you see here a sharp decline from starting from the 2015, because we witnessed many economic turbulences since 2015, like trade war between China and US, and the sharp decrease on the oil prices, Brexit, and COVID hit. But you see from the 2021, and then we include the figures. I couldn't add the figures of 2022 because we did not announce the half-year figures yet. There is a very sharp U-turn on the Edifactoring figures. Here on this slide, you see the late payments and dilution risk statistic from the FCI members from 2019 to 2021. Past due invoice payments and dilution risk increased by nearly 160% and 40% respectively during the peak of the COVID-19 crisis. So as you see, a sharp increase during the pandemic and sharp decrease after the pandemic. But what the graphics shows all the developments, but I must say, of course, it was a big shock for all of the members because of the transportation problems. We are all just stop all the working conditions. In this 2 years time period, FCI members manage their problems within themselves. So we didn't witness any big problems, any arbitration case, any payment problems within the FCI membership. So on the left hand side also you see the deletion rate. It decreased sharply by the end of the pandemic. I want to say a few words about the FCI investment. The most important one, recently we launched the EduFactoring 2.0. It's a milestone on our infrastructure of the EduFactoring. I think one of the most important influence of the last 2 years is the rise on the digitalization and e-commerce and blockchain and machine learning systems solutions, which had a what I witnessed a revolutionary impact on our industry, on automation of the processes, and especially on the processes of the operational processes. Speaking about the technology, FCI made a significant investment on our cross-border manufacturing platform. The new platform launched on the beginning of April, and we are approaching with the new platform almost 3 months without any issue, and our members are very satisfied with this upgraded version of the EduFactoring. But of course, maybe in the question and answer session, we can talk about the digital solutions. The investing on digital solutions is not an easy decision. I think the importance of the investment on a right solution with the right budget is very crucial. We are witnessing very big failures in the market. Even the big banks are in a consortium with some of the solutions, but they are failing in the market. So it is very, very important to decide and invest on the digital solutions, because there is no U-turn on this kind of investments. A short update about the FCI reverse in 2021-2022 period. FCI added 4 new banks on the FCI reverse solution. One is now start working and serving on the FCI reverse. I think the most important benefit of the FCI reverse is FCI membership itself, because we are active in 92 countries with 400 members. So it is the onboarding of the supplier is one of the biggest problems in supply chain finance solutions. So if you are FCI member and if you are using the FCI reverse, it is very easy to onboard in many of the countries with the support of the export factors. And if any of you interested to have more information about FCI reverse, we are pleased to present you all the details. And very short few words about the Islamic international factoring. For those of you who are doing conventional banking, it is the Islamic financial ecosystem is very, I know they're very far from all of you. But in 2018, FCI launched Islamic International Factoring as a new product. This product allows conventional banking, conventional financial institutions to work with the Islamic financial institutions under the GRIF rules, with signing a supplementary agreement. Because under the GRIF rules, we are structuring the trade, only the trade, because in our rules, there is no financing. It is very fundable what we are structuring, but there is no financing in the GRIF rules. So it is very Islamic itself. And by signing a very short supplementary agreement, you can work with the Islamic financial institutions. We have 5 new members. They are very big banks, Islamic banks in the system. And Islamic finance is growing. The growth rate of the Islamic financial institutions is higher than the conventional banking system. It is 10 to 12% for the last couple of years. And the grantness of this ecosystem is almost the same with the total factoring volume, which is like 3.5 trillion US dollar. And also I want to mention, we did the first Islamic international transaction with one of the European import factor and one of the Turkish export factor. And this deal, this transaction awarded by the first rank, they are choosing the best deal of the year during the annual meeting. So we are going to announced within this week all these business cases awarded by the FCI Consult. If you're interested, please take a look at this new product. And here is some of the impact I want to talk about of the Russia-Ukraine conflict on the CE and the SCE market. We expect the GDP to contract in the second half of this year in most of the CE countries as a consumer and producer prices rise, while domestic and foreign demand shrink due to the conflict in Ukraine. We expect region countries, and not only the region countries, also the whole Europe will gradually reduce their dependency on the Russian energy with the price of more significant budget deficit. And if the EU, all the EU countries stops importing oil and gas from Russia, the Russian economy will shrink by the expectations up to 20% this year and fails to rebound in 2023. In such a scenario, EU and the CE countries and the Western Balkans would probably fall into recession. So the recession risk is not small for the region countries, not only for this year, also for the next year. And the problem of the energy security, diversification of the energy sources, the rise in the commodity pricing, rising inflation, and interest rates creates, unfortunately, a certain uncertainty for the Central Eastern and Southeastern European markets. And this environment will create a need for liquidity. The good side, the good sign or good part of this scenario, this will increase the need of factoring. As a result, we expect the CE economies to grow on the average 2.5% on this year and 3% for the next year. And this is the global estimation by FCI for the receivable finance market. Today, it is a $6 trillion US dollar market. The biggest share is for factoring, 3.5 trillion, and reverse factoring, 1.5 trillion, asset-based lending in 500 billion US dollar, and account receivable securitization is $1 trillion. So by 2030, receivable finance market estimated to exceed $10 trillion based on a 6% compound annual growth rate, which is quite pessimistic. This year we growth 13%. So with this 6% compound annual growth rate over the next decade, the total receivable finance market we are estimating will account for nearly 10% of the global GDP. So factoring and receivable finance market is a very resilient, extremely resilient industry, no matter what is the difficulties on the financial ecosystem. So I anticipate the bright future for all of us. It is my last slide, where you can, we will share the presentations after the conference, I think. But if you need more information about these statistics or any documentation, please visit our website or social media. You can find all this kind of information. And thank you. I hope I am in line with my timing, Olena. I will give the word to you.
Yes, Betül. Thank you very much for your insightful presentation. Just one moment here. We had a question from Peter about two-factor system that you were mentioning. I think it was slide 12. If we can shortly get back to it and answer this question. And Roman, we see your question as well, but we will answer it in the end of our webinar. So can we do this, Betül?
Yeah, sure. Sorry, I was thinking after the presentation. This is increased because first all the transportation stopped. So and all the especially for the retail sector and the service sector, everything is stopped. So it is people cannot transfer their goods. They could not receive the goods on time and serve the client. Even they receive the goods, they cannot sell their goods on time. So it is, we announced, I think, 4 or 5 circulars. We're talking with all of the members. So with the agreement of the both import and the export members, we told them you can postpone all the payment terms according to, because you may remember when the pandemic started on May, we closed our operations for 6 months, nothing transport within the countries. So I cannot say that this country create more problem or that country, but all of the countries, they have experienced the transportation problem when the buyers could not take their deliveries. Of course, they do not pay. So it is they just make on the transaction, they just postpone all the shipping period, payment period, everything accordingly, and they manage this timeline together, and they solve the problem. So deletion is accordingly increased, because deletion means, if there is something on the because on the shipments we see that they could not, because of the some of the importing goods, the exporters could not have their labeling or some other inputs for their export. They could not they could not export their goods. So we faced up to 20% of deletion risk increase or during this period, because of the mainly because of the transportation. But of course, in this kind of times, chaotic times, there are some real disputes, real deletions, but also some of the not real, but because of the environment, the people want to pay late. So it's of course accelerate the problem. But it was like 6 months. Then everything opened, and with the postponement of the transactions and the agreements, we solved all the problem. We didn't say witness one slide before. We never witnessed a huge problem within the membership.
Okay.
Dispute not increased in between this period.
Mm-hmm. Okay, and have we answered about two-factor system?
Olena, you can see. I don't know. Do you see my mouse here? It is, it is the beginning. No, that the other one. The other one.
The next one or the previous one?
The next one.
The next one.
Okay, here it is. This is the beginning of December, May 2020. It is the highest. This is the beginning of the pandemic. The transportation stopped, and the payments is normally in FCI is 3-4 days. So the payments delayed almost 40 days. But it is, I think, for that time period, it was normal, because no one shipped their goods. And the prices of the shipments was huge, so they have to change the prices of the shipped goods. The prices of the invoice also changed. So everything was so chaotic on that period. But it was like 6 months. Then in between the FCI members, it is postponed. With this postponement, we did rearranging the agreements within the export factor, exporter, importer, and the import factor. We solve all the problems. But we backed our members. Personally, I was dealing with all of each and every deal if they came to me. We changed all the agreements and we managed. I think it is the best side of the factoring. It is very flexible product.
Okay. Thank you very much. And now, Magdalena, we are passing the word to you to share with us the ING's results and forecast of Polish market. You're welcome.
Thank you, Olena. Good afternoon, everyone. I have a pleasure to present you today ING results and forecast of factoring turnover trends in Poland. And before I move to ING commercial finance results, I would like to show you how Polish factoring market looked like in the first quarter of this year. Data gathered by Polish Factors Association are on a quarterly basis. So we today are looking forward to a publication of data after second quarter of this year. So let me present you the latest official data, which are for first quarter. And as you can see, the factoring turnover in Poland in first quarter of this year was 33% higher than in first quarter of 2021. And as you can see, it was the historical highest first quarter growth in many years, for sure the highest since 2018. Does the trend continues in the next month of this year? Please look at latest unofficial data of Polish Factors Association gathered after 5 months of this year. And during that time, factoring turnover in Poland grew up by 34% year on year. So it's continuing upward trend from first quarter of this year. And one of the leaders of growth was ING Commercial Finance, which grew faster than Polish factoring market with 45% year-on-year increase. What was the reason behind such growth of factoring turnover in Poland and in ING Commercial Finance? First factor of factoring turnover growth is always region's GDP. Data gathered by EU Federation for Factoring and Commercial Finance shows that factoring turnover is strongly correlated with region's GDP. On the graph, you can see last 6 years of factoring turnover in correlation to EU GDP. And I think you will agree with me that graphs shows that there is a predictable and strong correlation between GDP growth and factoring growth. The correlation is positive. So if one goes up, so does the other. And of course, if one goes down, the other goes down too. And the base rate of growth for the industry has been on average around 5% above GDP growth. Similar situation is visible in Poland, but the base rate of growth for the industry is much higher above GDP growth than in EU. So one of the main reasons of factoring turnover growth in first quarter of this year in Poland was strong growth of Poland's GDP. You can see it was 8.5%. I added to GDP's growth also inflation rate. Of course, some of you can say that inflation was already included in GDP, but nevertheless, I wanted to show you how it looks like if we put inflation, GDP growth, and factoring growth on one graph. And you can see that growth of factoring is higher than each of that factors separately. And it is even higher than sum of both GDP and inflation. It's orange lane on the graph. So there have to be another reasons behind such spectacular growth in first quarter of this year. So let's check how it will be with clients number. Looking at the graph, we can see that factoring turnover for sure was fueled by spectacular 18% year-on-year growth in number of factoring clients. It means, in absolute values, that during 1 year, over 3,000 entities decided to use factoring facility in Poland. So what was the reason behind such a huge increase in clients number? To answer that question, let's analyze what companies had the highest impact on that. On the left graph, you can see that 72% of whole growth was done by ING Commercial Finance. The second company, PKO Factoring, was responsible for 8% of increase in clients number. Such huge increase in clients number in ING Commercial Finance resulted that ING have a market share in clients number of almost 40% at Polish factoring market, when second company on the market, PKO Factoring, has 11.2% and the third, Idea Money, 10.8% of market share. So what lies behind such growth of clients number and factoring volume in ING Commercial Finance? Of course, one can say that in times of certainty, times of economic uncertainty, there is always observed higher clients' interest in factoring services, which are perceived by them as additional and very flexible source of funding. But the other aspect, the real aspect of such growth, which took place in ING Commercial Finance and had enormous impact on whole Polish factoring market, of course, in terms of clients' number, was digitalization and the digitalization of clients' acquisition and whole process of factoring services. So we have first answer what lies behind growth of factoring clients number in Poland. It was digitalization of factoring in ING Commercial Finance. I have to tell you that it speeded up acquisition process, also process of receivables management. It also made everything work faster, and it lowered risk because multi-checks and cross-checks in different databases are done in very short time. Of course, it also lowered the cost. I would like to show you also how this growth would look like if we exclude ING Commercial Finance growth from Polish market. And you can see that it would be 5%. Of course, it's a positive value, but not so spectacular as 18%. The next factor of growth in clients number, and it concerns not only my company but also whole market, is GDP growth. When economy develops, there is strong cash demand, and it has an impact on factoring popularity among entrepreneurs. We can say that the next two factors are already included in GDP ratio, but I wanted to state them separately. First is inflation. When prices of goods and services are speeding up, it also increases number of factoring clients who want to have additional source of funding to protect themselves from inflation. And the next factor, already included in GDP, which affects factoring turnover, is over-provisioning. Main part of Poland's growth of GDP in first quarter, 7.7% from 8.5%, was done by shift in inventories of Polish companies, which, as I said before, wanted to secure themselves from inflation and from consequences of war. And the last component of factoring clients number growth in Poland was cash flow demand. After pandemic, entrepreneurs, especially SMEs, have to repay government anti-COVID support and they wanted to be prepared for other than pandemic unexpected situations which can hit the market. And that is why they want to have factoring facility as a financial buffer. The time shows that they were right. So in my opinion, that were the reasons of factoring, of growth in number of factoring clients. Let's move to the reasons of factoring turnover growth. And as you can guess, they are the same or similar to the one I mentioned before. But clients number in the first quarter was not strongly affected by war in Ukraine, especially mainly due to the time needed for clients verification. I think it will be more visible in next quarters. But war had a strong impact on factoring turnover, and let me present the reasons of factoring growth in proper order, starting from the beginning of the year. As you can see, I prepared a graph to show you main components of factoring growth in Poland, in my opinion, of course, and it's a real vicious circle. So what was the first spark that started the vicious circle and process of factoring growth in first quarter of 2022? I think it was strong surge of demand connected to end of pandemic and end of lockdowns and improvement of consumer sentiment. The cash accumulated during the pandemic was released, and businesses have savings and have additional money from government support. So they release it, and it was real demand bump. That demand bump caused a jump in production volume, jump in demand in inventories, and of course it resulted in growth in prices. What else except that demand causes growth of prices? It was also lack of the goods and new problems with supply chains, which were not prepared for such turn in demand. There was lack of means of transport, lack of containers. Businesses have to face also problems with road blockade. Do you remember Suez Canal? It all increased cost of transport. Then lack of components revealed, and then lack of its substitutes. Also, commodities prices have grown rapidly, and it all resulted in strong increase in cost of production. Finally, new supply chain breaches appeared due to the new COVID outbreaks in China and zero COVID policy. So lessons learned from COVID pandemic by entrepreneurs caused that they wanted to have higher stock volumes to prevent from a new supply chain breaches, and they started to more over provisioning to protect themselves from possible threats and expected inflation, of course. And it was the start of skyrocketing inflation. And then came war, and businesses decided to increase their stocks further because they expected that prices of goods will grow more due to the fact that Ukraine and Russia are suppliers of wide range of products and components for different sectors. They expected also that there will be sanctions for Russia, and businesses didn't know how exact consequences of it will be on the market they operate on. They expected also problems with transport of goods from Asia to Russia and Ukraine. And they also expected other unforeseen problems. So businesses, what they did, they did again huge over provisioning, just to ensure continuity of business and protect from expected further inflation. Of course, it speeded inflation more. Another factor of increase of factoring turnover was huge number of immigrants which came to Poland from Ukraine. Can you imagine that in a short time, Polish population increased by 10%? So it has to rise the demand further. But despite the huge inflow of immigrants, the number of workforce decreased because sex structure has changed. There was an inflow of women and children, an outflow of men, which returned to Ukraine to fight. It affected mainly transport and construction sectors. So companies in Poland, where there is still low unemployment, started to pay more their staff, and it was another pro-inflation factor, an indirect factor of factoring turnover growth. And last but not least, as Betül mentioned, also in her presentation, was uncertainty. Some people say that uncertainty is the only thing certain nowadays, but that uncertainty caused further demand and it caused further growth of factoring turnover. So in my opinion, these were the reasons of factoring growth in first quarter and in first half of 2022. But will it continue in the second half? Will the sparks of that vicious circle be extinguished? The actions to cool down demand and reduce the inflation were taken by Polish government. There was the sharp increase of basic rates, and savings of households are running down. And I think that it is possible to stop that vicious circle, but maybe not in this year. So in general, I think 2022 will be good year for factoring industry in Poland. An upward trend will be continued. But there are risks awaiting, which are concerned with that vicious circle and which can affect growth of factoring turnover. Betül already mentions few of them, but the biggest threat is the risk of a global recession and a global crisis. I'm afraid that companies which were not fast to adapt to rapidly changing environment can face financial situation worsened. Especially SMEs can have problems to survive. It can create risk for factoring companies, and it can create also higher risk of frauds. And sharp increase in basic rates also does not support the development of factoring turnover, because clients perceive factoring as a more expensive than credit source of funding. But taking into account historical high results of first quarter 2022, expected results of first half of this year, I think this year will be very good year for factoring industry, regardless of mentioned before threats. Thank you very much. I see some questions.
Thank you very much. Thank you very much, Magdalena, for the very detailed analysis and your results in ING. Yes, we have one comment from Aysel that can you please explain in detail how salary increase affected the demand for factoring? I think it was in context of inflation, right? So this just pushes the increase.
Yes, if you increase the salary, the cost of production are increasing. Not only production, the transportation.
Yes.
So the inflation is, if you increase the cost of production, you have to include it in price.
Yes.
So the prices are increasing.
The amount
inflation is increasing. So also factoring volume, which is strongly connected with prices of goods, will increase.
Mm-hmm. Yes.
So this is the way the salary increases have an influence on factoring turnover in Poland. Also, the next question I saw is about over provisioning. So in Polish factoring market grew by 34% in 5 months. Normally, when there will be no war, probably it will be 20%. But when companies are buying more than they need, just to have stock in for any unpredictable reason, they are afraid that there will be blockage of trucks, and there will be problem with transport, there will be problem with goods. Do you remember, we cannot buy a car we want, we have to buy a car which is available. So the businesses are afraid that they will face the same situation, that they cannot, there will be probably such situation that they will be not able to buy the component they need. So that is why they decided to buy and to have it on stock to use them. And also when the war starts, everybody knows that there will be that it will make inflation higher than it is now. So they started to buy to secure goods in a very good prices. So that is why it's a vicious cycle. I couldn't find a better word for that. Each of that components influence that vicious cycle. So the demand was higher because of inflation and war, but higher demands speeds inflation. So salaries, people, everything cost more. People wanted more money. So it's also, if you have to pay your people, your employees more, you have to increase the price of your goods. So that is why over provisioning and salaries have an impact on factoring turnover in Poland.
Yes, exactly. And we have a comment from Tomasz that the basic rates went up by another 50 basic points. Yes.
Yes, it was 10th time. 10th time. Can you imagine, since October last year?
Yeah. So, yeah. I wanted to share with you to come to my question to you both. Because you mentioned the digitalization and in the context of their financing or availability or coverage, the SME segment by the factoring product, I wanted to share with you this one slide. So this is our study of digital factoring solution, which we do on an annual basis. And at the beginning of this year, we had from all, I think 80 now companies here in the Central Eastern Europe providing factoring services. So 17 from them implemented digital online or mobile application for factoring, and 12 companies provide fully digital factoring process. And if to share the distributions between the countries in the region, the leader here by the number of such providers is Poland. Next country here is Turkey and Romania. And my question to you will be, looking at this number, we see that the real focus, actually, that 17 companies have a focus on micro and SME customers. Of course, if we talk about the digital processes and digital solution, these are amounts up to 100,000 euro maximum, I think. So we see that actually the biggest part of the factors are focusing on corporate customers, on bigger companies, and probably all these results that you showed are mainly where the finance of bigger companies. And the reasons, or let's call it like this, the negative reasons that impacted the increase in the factoring during previous years was COVID, this year inflation, Russian aggression in Ukraine. My question to you, when we will have a strong positive factor impacting the increase in factoring volumes, and I mean by that is the coverage of micro and SME market, because these customers are extremely uncovered by the factoring and other financial services. And as also Betül mentioned, that factoring is a very flexible product, and it is actually less risky product. This gives a really great opportunity to finance SMEs with it, but probably it makes sense to do it with the digital solution, because then it is cost benefit goes well. So what is your prediction, Betül, maybe on a more global level, and Magdalena, as you have your microfactoring product that you're developing, maybe you can share also some results and your plan. Which percentage of the invoices that you financed were given to micros and SMEs, and what is your prediction also on that?
If may I answer?
Yeah.
Maybe not on global level, maybe not in invoices volume, but in number of clients. So in microfactoring, it's 62% of our clients.
Oh wow!
So it's we implemented factoring for micro clients in 2018 at the end. And now we have 62% of our clients are micro clients.
Mm-hmm.
So of course, in terms of turnover, it looks completely different, because the average volume for that micro client is completely different than for one big client. But I think it's if we take NACE and NACHE classification, 70% of our clients are clients from small and medium enterprises. Mm-hmm. So it's really, I think, good volume, and I cannot agree that we are not supporting small and medium enterprises. We are really supporting them. So
I think supports the best here on the whole market.
And in case of turnover, it's also in case of turnover, if we again take NACE classification, so it's also 60% of our turnover in this year was done by small and medium enterprise.
Mm-hmm. Great.
So it looks like that. Polish Factors Association does not gather data about divided by size of the client, so I don't have such data about from Polish Factors Association.
Betül, what do you think on that?
This I I think that for the SME financing, government support is crucial, and government support on the level of maybe decreasing the reserve ratio of this kind of credits, some kind of very supportive decisions should be taken. Because from the factoring company's perspective, I agree with Magda, because it is even in the big factoring companies in my region, when you look at the number of the clients, the SMEs are taking the biggest share. But when you look at the prepayment amount, it is of course the big corporates. But of course, funding SME, it needs a really big investment on the digital process, because you cannot market your product as you market on the corporate clients. So there are some factoring companies in different regions completely concentrated on the SME and MSMEs sectors, and they are some of them are completely digitalized. So it is for the big factoring companies, or maybe some of the halfly digital factoring companies, it's very difficult to compete with them. But what I see from the profitability perspective, if you don't have the SME client, it is very difficult to have this profitability. This is important. This is crucial for the factoring industry. But from the SME segment, it is also crucial because they don't have any other alternative for funding.
Exactly.
Especially in this environment, if they don't have any liquidity from the banks, the only solution is the factoring. So it is vice versa. Both industries need each other. But I think that the government, we need to increase our lobbying activities, because you need to invest more to serve more clients, more SMEs on the sector. But what I see, without SME sector, factoring industry cannot survive. So we are trying, as I'm seeing, all the factoring companies are trying to increase their support for the SMEs. For the emerging countries, this is much more difficult. Because the infrastructure is very not supporting for the funding. For example, in Polish market is very developed market for the factoring. I mean, there's a association law, invoicing, everything is supporting for the and also the information sharing institution. I don't remember the name, but it's working very well. So it is all this infrastructure allows factoring companies to finance the SMEs. But some of the emerging market, there is no market information, and they don't have their information, the balance sheet, everything. So if there is no market information available, the invoicing or sharing information systems, it is difficult to finance the SMEs. So it is the development. It also depends the development of the markets. So at the end, it needs the support from depending on the country's position, maybe the central bank, maybe the legal authority, the investment on the digital solution, e-invoicing system, voice recording system. These all are just completing each other.
Yes, this obligatory e-invoicing, which will be in the European countries coming like next 2-3 years. So yes, this will push, of course, positively.
If it is legally forced by the government, it is much more. For example, in Turkey, we have a invoice recording system, and in fact, for factoring companies, it's legally binding. Without recording the invoices, it is not possible. So it is very safe way to finance SME, because there is no double financing, there is no double invoicing. The system prevents all these codes. Because I mean, of course, our time is quite limited. As Magdalena also mentioned, growth is increasing in this kind of uncertain market conditions.
Okay, so we have no questions, and we are to close our webinar. Thank you very much, Magdalena and Betül, for your great and brilliant presentations. Thank you, our attendees, for very active participation and staying to the very end. So thank you very much. See you next time.
Thank you. It's our pleasure to join you today. Thank you.
It was a
Thank
pleasure.
you. Thank you. Thank you very much, and see you next time online
Bye-bye.
in our webinars and physically, hopefully, in our conference in November. Thank you and goodbye.